Very good morning, friends. So today we are going to discuss one of the compulsory question for your CMA examination. Which topic we are going to discuss? The topic is, as I discussed, a compulsory topic for a question for your examination. None other than contract costing. None other than contract costing. So I know all of you are ready. I am also ready. Shall we start? So this is one of the interesting area, one of the interesting topic where it regularly comes for your exam. So hope all of you are ready. Now let us discuss how a contract costing is dealt with. First of all, we'll discuss the meaning of contract costing. What is the meaning of contract costing? Two terms are there. One term is what? Costing. The costing means what? The techniques or process of ascertaining the cost. What is the another term? Contract. What is the meaning of contract? See, we have discussed a term called a job. We have discussed a term called what? Job. A job is a short-term work which may complete within a day or within a week or within a month. That is maximum within a year. Whereas contract are those job work which will not complete in one accounting year or one financial year. Example, construction of a bridge, construction or development of a ship, construction of a road. All these work, will it complete within 1 year? It will take more than 1 year. Since it takes more than 1 year, lot of interesting question will be there. How to treat the profit, how the work in progress has to be treated, can be treated as an asset or not. These kind of discussion, everything are discussed under what? Contract. So the meaning of contract costing, we can say it's a techniques or process of ascertaining cost for a contract, or it's a techniques of process of dealing when the works are done on a contract basis. When the works are done on a contract basis. So here, what we are going to ascertain? The cost of a contract. Cost of a contract. So let us first have a basic idea about a contract. You can just assume a construction of a bridge or even a construction of a house. Yes. So how we will able to discuss, my dear friends? First we will go with how this general discussion about contract. First thing, there are mainly two parties are involved. There are mainly two parties are involved. Which are the two parties? First one, the person who undertake the contract, we called as contractor. The person who undertake the contract, we call it as what? Contractor. Then to whom the contract is taken, we call it as what? What we call? Any idea? Contracting. What do we call? Contracting. So there are two parties are involved. Which are all the two parties? Contractor and contracting. The person who takes the work is called what? Contractor. To whom the work is taken, we call as what? Now, coming into discussion, which books we are discussing? We are discussing books of contractor. We are discussing the books of contractor. That is, we are a contractor. We undertake different contract in different sites or different cities. We undertake different contract under different sites or different cities. So we are discussing the how the books of a contract. How the books of a contract. So as we discussed in contract costing, we are going to ascertain the cost of a contract. See, generally a contractor will carry only one work or more than one work. Generally, any contractor, he will have more than one work. So in contract costing, how we prepare now? We'll prepare a contract account for each contract. Contract account, we prepare a each contract. That is, so far you know about cost sheet. To ascertain the cost in job costing or generally in batch costing and all, we go with what? Cost sheet. Yes. So here in contract account, we go with a not cost sheet, we'll go with a contract account, that is T form. For each contract, we will have a separate contract account. For each contract, we will have a separate contract. That means I am a contractor, I have a site in Chennai, there will be an account called Chennai account. If I am having a siting in Bangalore, there is a contract called what? Bangalore account. If I am having a site in Mumbai, there is an account called what? Mumbai account. That means for each contract, there will be a separate contract account will be there. For each contract, there will be a separate contract account will be there. So let us discuss how a contract account will be there. Next half an hour or 20-minute discussion, you will be able to understand all the different situation of what? Contract. So first we have discussed what? In a contract account, all the separate contract identified in a separate account. So let us discuss first a contract account A. We will discuss what? Contract account A. See, I have told it is a account, so it will be in a form of what? T form. It will be in a form of what? T form. So one column will be there, date, amount, then another also will be there, amount. That is one debit column and another one is one credit. Now, let us discuss how a contract account will be. See, debit side, all the expenses to contract. Debit side, all the expenses to contract. Tell my dear friends, for a contract, what are all the expenses will be there? Material. That is, what are all the material? So you will have your materials. You will have your materials. This material, they will use different terms. Material purchased, material purchased, or material received from HO, material received from HO, or material received from warehouse. Whatever the term is there, if material is bringing to the contract, material is bring to the contract, it will become under what? Debit side. It will come under what? Debit side. All kinds of material. Then what else will come, my dear friends? If material is over, next item will be what? Labor. Next item will be what? Labor. See the question they will tell like this. Wage paid 25,000. Wage outstanding 5,000. My dear friends, shall we take 25,000 or including outstanding 30,000? What is the amount we'll take? See, very good. This contract account is just like a P&L. This contract account is just like a P&L. So how you treat a P&L, the same adjustment will come. P&L will go in what? Outstanding will take. Prepaid adjustment will be there. All the adjustment will be there. It is just like a P&L of a. So how you treat a P&L? Debit side all are expenses. P&L debit side all are what? Expenses. Same way you have to treat all the expenses, including adjustment of what? Outstanding and prepaid. Suppose if you have any prepaid, what we have to do? We have to go this amount, we have to add, then we have to reduce. We have to take what? 28,000. Are you clear or not? So let's say one example, material amount 1 lakh, wage 28,000. Now what all the next item will come? Other than material and wage, you will have overhead. You will have what? Overhead. Overhead, they may be given the amount, or they will tell you recovery rate, 100% of wages, 20% of wage. Like that percentage will be given. Let's say another 60,000. That means what are all the expenses relating to contract will come under what? Debit side. Any expenses will come under what? Debit side. Any expenses what they are telling they will come under debit side. Next will come depreciation. Next will come what? Depreciation. Depreciation sometime they will give you the clue directly. Now let me tell you a small example. I am having a big crushing machine. Big crushing machine. 30 days used in Chennai site. 90 days used in Hyderabad site. Now this contract account is for Chennai only. This contract A is for Chennai only. Now my dear friends, what is the amount of depreciation you have to treat for crushing machine? Since Chennai we used only for what? 30 days. We have to charge only for what? 30 days. Hyderabad account we have to charge for what? Now balance days it is not worked for any contract. That means there is a general P&L will be there. These are all for each P&L. There is a general P&L will be there. We call it as costing P&L. We call it as what? Costing. That depreciation will be taken there. That is if you are not used at all. For contract account Chennai, only Chennai details only will come. No other details. Here or not? Now, every expenses will treat here. Let's say 40. Now, we go for credit side. We brought some material. What is the material amount we brought? 10,000. 1 lakh. Some of the material are theft. Some of the material are theft or maybe lost by fire. Is it a normal or an abnormal? Abnormal. Those abnormal situation will transfer into costing P&L. That means if an amount of 2,000 lost by fire or maybe lost, that will go to which account? Costing P&L. That means it is a general treatment in costing. That is all the abnormal reason will not be part of the cost. That has to be transferred to costing P&L. So we have to just write costing P&L. Bracket, if you want, you can write material lost, material theft, whatever them. So all the abnormal we have to reverse. Sometimes we brought some material, excess stock, we returned. So material return, if they are telling, we have to reverse material return. What is the amount? 5,000. Example. Now, what are all the other item will come? Special adjustment we have discussed it. What are all the other item will come? Closing material. What will come? Closing material. So what is a closing material? That also will come. Let's say another 7,000. So debit side is full of expenses. Credit side, any abnormal item we have to reverse. Material return we have to adjust. Then closing. This material is nothing but closing material. Here there is no strict rule of accounts that you have to treat proper name and all. You can simply write closing material. Now we have discussing which area? Contract. Generally a P&L, what will be the item? Sales will come. Generally a P&L, what will come? Sales. But in a contract, sales will not become in the initial stage. Yes, a contract, then what will come? The work will be started, but it is not completed. We call it is by a name called working progress. We call it by a name called what? Working progress. Now, how the amount of working progress will be identified and how it will be fixed, we'll discuss. See, a contract, generally, let's say, a contract is running. Maybe your house work. This contract is for 100 lakh or maybe 100 lakh, 1 crore. You agreed with a contractor. You will pay what? 100 lakh. My question to all of you, on the date of signing the contract, will you pay the entire 100 lakh to the contractor? Why? Generally, we will pay what? On each stages of completion. Maybe the foundation work completed. You may pay 10 lakh or a 20 lakh. First floor completion, you may pay another 20 lakh. Maybe second floor completion, you may pay another 20 lakh. Maybe on plastering time, you may pay another 5 lakh. Then maybe another painting time, you may pay another 5 lakh. Lift installation, you may pay another 5 lakh. Am I correct or wrong? Yes or no? That means you will pay after each stages of completion. Now, the first stage, foundation work is over. The first stage, foundation work is over. Contractor will call you. Sir, foundation work is over. Can you please release the payment? Foundation work is over. Can you please release the payment? What we will do? Yes. You may say that we'll release. No. Generally, a contract work, they will send the engineer to the site, especially government. They will send engineer to the site. The engineer will inspect properly. Engineer will inspect properly and check whether the work is properly completed or not. Foundation work fully done. If engineer after the verification, he feels that yes, the foundation work is properly done, he will certify the work. That is what is called work certified. What do you call that? Work certified. What is in by work certified? Work certified is a portion of work completed where the engineer is certified. Yes, it is completed. So, on the engineer work certified is what? 20. Generally in a contract, what happened now? Practical situation I will tell you. On this 20 lakh work certified, you will release maybe 90% or 80% of cash. You won't give not full money. You will keep some amount as a retention. We call it as a called what? Retention money. That is, if you complete a 20 lakh work also, generally contracting will not give what? Full amount. Contracting will give what? 90% or 80%. Balance 10% or 20% will be retained for meet the future contingencies, because sometimes contractor is not fulfilling the work. It is very difficult. So that we will keep generally some amount with us. We call it as what? Retention money. We call it as what? Retention. So now we have discussed a term called work certified. Work certified is what? It is the portion of work where the engineer visited and certified. Now, your engineer visited, amount also released. Now what contractor will do? Contractor will start the work of what? First floor. Contractor will start the work of first floor. Now, first floor work is under halfway. First floor work is under halfway. You are preparing your contract account on 31st March. You are preparing your contract account on 31st March. Now, on 31st March, the work so far done, we can classify into two categories. Work so far done, we can classify under two categories. Those work contractor visited and certified, we call by a name called work certified. Now, my question to all of you, at this 50% of first floor work, since it is a 31st March, will the engineer will visit? No, engineer will come only when what? Work is completed. So we can classify the work into two parts, work certified and work not certified. Work certified and work not certified. That is the two area we can discuss. So we can classify the work in progress into two. First one, it is what? Work certified. What is the meaning of work certified, my dear friends? Work certified is those work where the engineer visited and certified the work. Whereas work uncertified is engineer is yet to visit and certify the work. Engineer is yet to visit and certify the work. This will be a contract account generally for the first year. We are discussing now for the first year. Because first year and all contract is not completed, no sales will come. This is generally for a first year. So I will repeat once again, what role the item will come, my dear friends. Debit side is full of expenses. Credit side, whatever the abnormal, reversal, closing material, then will come what? Work in progress. Now we are going to discuss the main part, the last part. Now, how we have to close this account? How we have to close this account? See, generally we know debit side is full of expenses. Credit side is somewhat our incomes. Yes or no? So we have to check debit side more or credit side more. In this example, generally we have to check what? Debit side more or credit side more. Here debit side, the total amount is what? 2,28,000. What's the total amount? 2,28,000. Here the total amount only 59,000. Now tell my dear friends, debit side more or credit side more? Debit side more. So what you have to treat now? If debit side is a more, you have to take the total in debit side. You have to bring here this balance amount. We call it as a loss. This balance amount we call it as a loss. This has to treat into costing together. We have to treat into costing profit. That is debit side more, credit side less. We treat immediately loss. We treat immediately loss. First situation clear? So I will write the first situation. What is situation 1? That is debit side greater than credit side. What we have to do? Treat immediately as which account will go for? This will go to now situation 2. Now what? Situation 2. Situation 2, let's say this amount work certified is 2,50,000. Now we'll check what's the total here. Here we have 2,94,000. Here we have 2,28,000. Now you tell my dear friends, debit side more or credit side more? Credit side is more. So what we will take it now? We'll take the credit side. This difference, this chapter is called contract. My first question to all of you, this contract is over or just started? It is in the first year. It is just started. It is in the first year. We have discussed a contract will take more than 1 year, may take 5 years. Bridge construction and all may take 3 to 5 years. ship construction loan more than that. So it will take more time. So let us take the point. This amount, since our contract is not completed, we cannot treat as a profit. We call it as a short-term adjustment called a notional. Why we treat as a notional profit? Because contract is just started only. Future there may be chances of what? Loss suffering also. Because if you treat as a profit, this will reflect in your balance sheet. This balance sheet is a public information. Bank will check, supplier will check, all the stakeholders will check. So bank will think that, oh, wonderful, this company is having a very good profit. But actually it is not a real profit. Because the contract upcoming year, material price increased, labor price increased. Will the contractor will give you the price? No, you have to suffer. Contractor has to suffer. So there is chance of what? Suffering loss. So if you short that as a profit, that will lead a misleading information to the public that we have to avoid. That is the reason we treat it as what? Notional profit. Now the big question. Sir, this notional profit, can we treat any small portion as a profit? Because out of 5 years, 1 year we have completed, sir. Or out of 3 years, 1 year we have completed, sir. Or out of 2 year work, 1 year we have completed. So can we treat small amount? You got my point? Yes, that will be based upon. That means the question is, can we treat any small amount as a profit or not? That we have some cases there. I know you are all ready. Now which concept, my dear friends? Now your credit side is greater than your debit side. The difference will be called as what? Notional profit. Now, the amount of profit will be treated from notional profit. Now, this is the point. What is the amount, sir, I can treat as a profit? There are 4 cases as case 1. Case 1. If percentage of work completion less than 25%. If percentage of work completion is less than 25. What is meant by percentage of completion? That is, out of total work, what is the percentage we are completing? If it is not mentioned in the question, we can get by a formula also. Work completion is equal to work certified by contract price into 1. Work certified by contract price into 100. We can able to get the work completion also. So, if the percentage of completion is less than, my first question, my dear friends, this less than 25 is a small number or a big number? Small number only, just small. It may be 5, 10 small only. What the provision tell that? Treat full amount as reserve. What they tell? Treat full amount as what? Reserve. That means we have an amount of excess money of what? 66,000. This full amount will go to reserve. That is, this full amount will go to reserve. You cannot treat any amount as a profit because you are just started only. You are just started only. Now case 2. First case clear? So far we have discussed the 2 cases. Debit side more, credit side less. That is, expense is more, income is less. We treat immediately as a loss. Loss we have to treat immediately. Loss we have to treat immediately. But when it comes to profit, that is your credit side, debit side, credit side is more, debit side is less. we cannot treat as a profit. We call it as what? Notional profit. We call it as what? Notional profit. Now, what the amount we can treat? It is based upon a certain slab. First slab is what? If the percentage of completion is less than 25, we have to treat full amount as what? Reserve. Now, case 2. Case 2, if the percentage of work completion 25 percentage to up to 50%, that is 25 percentage but less than 50%, that is 25 percentage to less than 50%. That means little more work is done. Yes or no? In such a case, the provision tell that we can treat profit some amount. We can treat profit some amount because almost coming into half stage. Or we can say 25 plus 50 half, around 33%. Around 33%. So they said that you can treat 1/3 of notional profit as a profit. What is the amount? 1/3 of notional profit. We know notional profit. In that, what is the amount? 1/3. Now, there is a one condition also. In your accounting, you will learn one standard called revenue recognition. What is the point? Revenue recognition. Or what revenue recognition tells that you have to realize the revenue first. Here, you have to check whether cash is received or not. You have to check whether cash is received. If you are not received the cash, then we are treating is good or bad, not good, because in future it may become what? Bad debt also. So what that tells that you have to adjust the cash received also. For that we will make a formula called a cash received by work certificate. That is, what is the percentage we have received? We have discussed that sometime 90% will receive, sometime we'll get what? 80%. That percentage we have to multiply. That percentage we can say how you will get 90. Cash received is 1,50,000. Cash received is what? 1,50,000. Work certified is 2 lakh. Work certified is 2 lakh. That means 75%. That percentage you have to multiply. That percentage you have to multiply. Are you clear or not? Yes or no? That means you are discussing stage 2. Stage 2 is what? 25 to 50%. Less than 50%. Where you have to treat profit is what? 1/3 into notional profit into cash received by work certificate. Now we have go to the case 3. What is case 3, my dear friends? Case 3, percentage of work will be see, percentage of work completion, 50% or more. 50% or more. Or up to the completion. Generally, we take up to 90%. Generally, we take up to 90%. But I told even up to completion also we can take. Nothing wrong in that. That is above 50%. Above 50% is a more completion than 25, yes or no? So what we do now, the same formula only, but they are telling not 1/3, you can take some more amount as a profit, that is 2/3 into notional profit into cash received by, that is 2/3 into notional profit into cash received by works. Are you clear or not? So we are discussing each slab. Let's see how it will come. Let's assume in this question, let us assume contract price is 5 lakh. Contract price is what? 5 lakh. Your work certified is what? What is the work certified? 2,55,000. See, generally, rather than What is the formula, my dear friends? Work completion. Work certified by contract price. Work certified by contract price. So let's see. Your work certified is 2,55,000. Your contract price is what? 5 lakh into 100. What is the percentage? That is above 50. If above 50 percentage now, what is the amount we'll treat as a profit? 2/3 into notional profit. The notional profit is what? 66,000 into cash received by work certificate. Let's say 80%. What is the amount? 80%. So how the treatment, my dear friends? 2/3 into notional profit into 80%. What is the amount you are getting? 35,200. So what we will do now? This 35,200 will be treating toward P&L. This amount will go toward P&L, or we can say costing P&L. Whatever you return, it is both. Now, my dear friends, what is the total amount? 66. What is the total amount? 66. There is a balance some amount. What is that amount? 3,800. What we have to treat this amount? What we have to treat amount? This we have to go for our previous treatment. That is balance we will treat as what? Balance will be treated as what? Are you clear or not? Yes or no? Yes or no? So this is how the adjustment for a contract. We have discussed up to 90% or up to completion. Now one more stage is there that we will discuss after completing few problems. One more stage is there that we will discuss after completing some more problems. Clear or not? Now we have to practice the sums. Before practicing the sum, see, this is the question we have just discussed. This is the question we are just discussed. This is first year. This is for what? First year. Now let's say if we are going to prepare contract account for second year. If you are going to prepare contract account for what? Second year. What are all the points will come, my dear friends? Second year is a continuation of what? First year. Second year is a continuation of what? First year. Yes or no? Yes or no? So, what is the closing material here? 7,000. That will become here what? Opening material. What is the amount? Now, there is a closing work in progress. There is a closing work in progress. That will become what? There is a closing work in progress. What will become, my dear friends? That will become opening work certified. What is the amount here? Work certified 2,55,000. Next will be work uncertified. What is the amount? 20. So what you are understood from, my dear friends, what are the closing that will become? Now here there is an item. This wherever go work in progress, reserve also will follow. Which item will follow? Reserve. Actually, this reserve is a short-term adjustment for a future contingencies. It is not a reserve out of your profit. It is a short-term adjustment for future contingency because your contract is not completed. Because of the reason you are not treating as a profit, you are just keeping as an adjustment. So what we have to do now? What are all the reserve you have treated in the first year? You have to brought a balance that amount here. That is wherever come reserve, it will go parallel to your work in progress. So this will be a opening of a contract. So what role will come? Your closing material will become opening material. Closing work in progress will become opening work in progress. If any reserve is there, that will come also in the opening. That will come not in the debit side, that will come under credit side. The reason is what? It is a short-term adjustment. You have to close the accounts. That is the reason we will go with working progress. Clear or not? Now let assume this is your last year. This is your last year. Entire work completed. Let's say some more item I will take it. Direct material 5 lakh. Direct labor 2 lakh 15. Now your entire work is completed. If your entire work is completed the last year, can you treat now work in progress term? Work in progress means what? Work started but not completed. If work is completed, can you use this word? If work is completed, it is all about sales. The full contract value you have to write here, contract the account. That is by sales. That is you have to make it as what? What is the amount you have? Here not. What you have to do, my dear friends? If your contract value is 10 lakh, you have to treat the full amount. You have to treat the full amount. There is nothing, no adjustment. Are you clear or not? That is, if the contract is getting finished, if there is no work in progress, 100% is over, then what you have to do? You have to write full amount into which account? Contracting. Now, the final discussion. Debit side more, credit side more. Here, debit side, what is the amount? 10 lakh 37. Let's say this we will make it as 11 lakh. Now, your credit side is more. This amount will take. This will be taken here. This balance, my dear friends, this amount, now what you call entire contract over or not? If the contract is over, there is a nothing term called a notional profit. This will go to directly to P&L. If it is a loss, also the same. That means if the contract is over, then there is nothing called what? Notional profit and all. You have to treat as what? So this is the adjustment of what? Contract. With this discussion, you will be able to do 80% of all the problem of this chapter, my dear friends. Balance 20%. We'll discuss the case for, then you will understand. So what I want, my dear friends, now, you can just write this adjustment. Then we will start with the problem. Come on, friends.